Hi, welcome to the Market Alert for Thursday, the 30th of June 2016. So yesterday in the pre-market session, we saw the market moving higher, and the market following on from the 300-point rise from the previous day. We'll look at that in more detail in just a moment when we have a look at the daily chart. So the first signal was a sell signal, which resulted in a 28-point loss. This was followed by a buy signal 15 minutes later, reversing, and the market moving higher up to the crude oil inventory figures, which came out better than forecast. You can see there at minus 4.1 million, so the drawdown on crude oil 4.1 million barrels instead of the 2.3 that was actually forecast. This then gave the market the excuse to continue to move higher. We then had another signal that went on to hit the 20-point scalp, and then later on in the evening we had another signal there also hitting the 20-point scalp, and then trading up to the 17,700, just below it before the market closed. You can see a big spike in the market in the after hours, and this was down to the let's get the right news item. Future spike after banks unveil tens of billions in buyback. So the banks are buying back their own shares, no doubt to stop traders actually plunging their values on the market. You can see there the number of buybacks that are going on, and this for whatever reason was a boost to the market, and that's why you're seeing this, but again soon fizzled out as the market's been sideways to low for the remainder of the Asian session there. In the daily chart, you can see 2 days of dramatic moves to the upside, but I want to bring to your attention something very important, and that is this move is on a low volume. There's no buying the dips on this occasion. The market is just being marked up by the professionals, just trying to bring this market back. Also, if you look at the retracement from this high to this low, you'll see that we're in the 62% area, crucial area. Watch the 76% for this market. Now, when is the market going to sort of go back to the downside? Well, it could be some time. This market could end up trading sideways between now and September before we see anything major. And as I said to somebody yesterday, really any sort of major down move to the downside, if it's to be based upon the Brexit vote, will come when somebody has the courage to actually sign the Article 50 to set the process in motion of coming out of the EU. At the moment, we're still in. So the market is showing that at the moment. That's why it's rallying back. But the next major big moves, if the moves are going to come as a result of Brexit, will be from the day that Article 50 is signed, in my opinion. And news-wise today, before we talk about that in a bit more detail, what have we got at after 2:45 Chicago PMI? Mr. Carney is going to be speaking at 4 p.m, so the market will probably take no notice, but they will listen to Bullard at 6:30 p.m. I would imagine that whatever either have got to say is going to be interpreted as bullish for the market. You'll probably see a move to the upside at this time. On the implied volatility front, well, of course, this has dropped dramatically, 1362. You can see that in the chart there, pulling back quite nicely. This is characteristic of a market that's moving back to the upside, giving the options the chance to remove some of the froth off the premiums. And again, a lot of people would have actually bought put options thinking the markets were going to fall apart, not understanding how they work, and of course only to see the premiums fizzle away as the implied volatility is dropping, because it does the opposite. And a couple of other things. Deutsche Bank, as I said, if Brexit is to be the next sort of catalyst for the big move to the downside and the falling apart of the financial system, which I don't think it will be, because this one I've spoken of a long time. Deutsche Bank poses greatest risk to global financial system. It didn't pass the stress test as was released yesterday evening. That's why it's the number one news item at the moment. And if you have a look at the graphic, move down a bit, you will see how many banks are inextricably linked to Deutsche Bank, including the UK's very own Barclays Bank, which I recorded a video about last year, the relationship between the two, and RBS as well. So again, we're not getting out of this one should Deutsche Bank exit stage left or is unable to pay any of the 50 trillion they have in the derivatives. Well, they can't pay it anyway, but should they be asked to call and pay them, then we've got a problem on our hands. And again, it might be something like this that takes down the financial system and puts everything into a recession, and not necessarily the mainstream propaganda that we're going into recession because we voted to come out of the EU. Again, bit of a red herring when you've got this sort of thing going on in the background in the markets. But of course, nobody really wants to know about Deutsche Bank. They're more interested in using the current Brexit vote and result as their reasons for any sort of financial turmoil, which is strictly not true at all. But anyway, that's it for today. Keep an eye on the old Deutsche Bank there, and if there's anything to report during the remainder of the day, then I will let you know. Other than that, thanks for watching. See you in the next one.